Good morning. My name is Alexey and it's 7:40 in the morning. We are located on Hawaii, Big Island. It's a lovely sunny day, no clouds, and today we're going to talk about real estate investments and specifically Airbnbs. I have been in this business for 18 years. I'm a real estate broker in the states of California and Hawaii, and I have been buying homes for myself and my investor clients for many years. Recently, we have been reading in the news that Hawaii is banning Airbnbs. They're being highly regulated because this investment vehicle is very popular among investors. And we wanted to make this video for you as a guide on what to look for, what to avoid, and how to structure this transaction, and how to analyze an existing project to see if it's worth buying one that's already set versus building one from scratch on your own. First thing we'll look at is licensing and zoning and other regulations that affect your ability to manage and market these properties for short-term vacation rentals. County does it through zoning. There are also HOAs if it's an apartment or a condo or a townhome. That also affect your ability to rent for people on a short-term basis. Some associations say it can be 7 days, some can say not less than 30 days, not less than 60 days, so we'll look into all that. This particular house is located in Kona on Big Island, and it has a thing called STVR, non-conforming use permit. So it's a house that has been a rental before they passed legislation banning new Airbnbs. So this home comes with a permit which is transferable to the new buyer. Why am I saying that? Why am I starting with licenses and disclosures and this boring stuff? The reason is we want to protect you and ourselves. We want to protect you and ourselves, and we want to protect our down payment. We want to protect our investments. We don't want to risk renting a house illegally when the state or the neighbors can complain, fine you, prohibit you from making this a rental, take away your house, foreclosing it. You're gonna lose your investment because you were thinking, hey, my tenants are gonna cover my mortgage, and in reality you can't rent it out. I know there are some people with different risk tolerances and they do rent out units illegally. I'm not one of them, and I highly recommend you do everything by the book, and specifically we start at zoning, we start at looking at homes that can legally be rented out. That's point number one, point that's very important. So let's go inside. It's getting hot because 8 a.m. already, and see what's hiding behind that huge red door. Let's look at what they did right, what they did wrong, what I think about this home, and we'll continue discussing the process of finding and fine-tuning vacation rentals. Let's go inside. Grand entry. You come in, high ceilings. That's a wow effect you're looking for. When we're analyzing a project like this, I know some of you might come in and say, hey Alexey, look at this carpet, it looks terrible, or I hate the paint color, or the layout, I won't be able to live with that. I appreciate the input, it's very valuable, however, it's a little bit misplaced. Why am I saying that? We're real estate investors. We are buying a business, and sometimes we would buy a house that you won't want to live in yourself. What's more important is the data we analyze that shows that this home will be profitable, will have demand by the tourists. And let's talk a little bit of how exactly we analyze properties and how can we make an educated guess on which home will be renting out and for how much, and which one will not. There are certain platforms such as Airbnb, All the Rooms, and others who sell rental data. They buy it from Airbnb, VRBO, Flipkey, HomeAway. They structure that data and then they sell it to investors. We would use that data, look at comparables, look at similar listings that are available to tourists, something with similar amount of bedrooms, bathrooms located in the vicinity. You won't be comparing a home that's further inland, for example, like this one, to the oceanfront property, because these would be apples and oranges. We want apples and apples. Then, when we find a few homes, we start to dig deeper. For example, what we're looking for. We would look at occupancy rate. Occupancy rate will tell us how many days out of the available days the home is being rented. You have to be careful with these numbers. Say you buy a house and you live 6 months on Hawaii yourself and you rent it out for the other 6 months. Which 6 months are you occupying? Are you taking prime time? Are you using Christmas, New Year's, and summer holidays when kids are not in school for yourself, and you rent out the home the rest of the time? If that's the case, that data won't be good. It won't be any good for us. We want to look for homes that are professionally managed by property managers, not self-managed. So if you see a listing that only has one individual and they only have one house, and this is the only house they have, and they have few reviews, and it's only available 150 days a year, we can't trust that data. It's not a good comparable because we don't know how they're marketing it, how fast they're applying to tourists, how perhaps they're losing business. We want to find a good, reputable property manager, take their listings, see what reviews they have, see what their occupancy rate is, what their reviewers are saying, what they like about the house, what they don't like about it. A good proactive property manager would be foreseeing issues that tenants have. For example, in Hawaii, they would want some obvious things like maybe a set of sunscreen, beach towels, beach chairs, stuff like that. And if you have your tenants complaining, hey, the house was fine, but we didn't get any beach towels, well, that would be a lame review. You want to avoid that. Then we gather that data, we look for a house, we structure that data to see if we can fit it into the house, and then we make a decision. Will it be a good purchase or not? For example, this property where we're in right now, we went to Airbnb and we pulled data for this particular house. Average daily rate for this house is $751. Occupancy rate that they have is 91%. This is very high. And days available are 332. What does it tell me? Owners only live here for about 1 month out of the year. They're renting it out completely for 11 months, and they're doing a fantastic job marketing it because they get a very high daily rate of $750 and their occupancy rate is 91%. What does it show to me as a real estate investor? I see that the carpet has spots. I see that the furniture is dated, but numbers don't lie. If I know that it has 91% occupancy rate, it means they're doing something right. And we'll walk around the house, we'll note things. For example, over here, I noticed they have this covered lanai, which is great for Hawaii because, well, Hawaii doesn't get really winters. You can see there is no glass over here. And they have a bed on the lanai. So you can have kids, teenagers sleeping here when the rest of the home goes to bed. This is not a formal bedroom. This is just extra place to crash. And we have 3 bedrooms, or 4. 3 bedrooms down. We have 3 bedrooms downstairs. This is 4th place to sleep, and let's see if we will find more. So that's one little thing to know. Great idea, and this whole thing packs away into this nice suitcase. If you take this particular house, you might not like it at first. It might seem weird. There are walk-through bedrooms downstairs. The layout is a little strange. The kitchen is upstairs, for example, so if you bring groceries and as a tourist you would go to Costco, you would buy food for a week. That's a lot of food, a lot of alcohol, water, steaks. You have to carry them upstairs. Not really efficient, not really great. People might have issues with that. So you as an investor, if you're looking at yourself living in a house, you might say, hey Alexey, I don't want to bring food upstairs every day, but you won't have to. You won't live here. This is an investment property. If our data shows that tourists like it, it means they like it. It means set aside your reservation, set aside your own personal thoughts, and look at the data, look at what the data shows you. It's very hard to step over that over-analyzing pattern. As we go outside, we look at things that might further discourage you as an investor. You can say, well, I'm not a fan of this railing, because if you have little kids, they can climb up the railing and fall down. I have kids, I see the railing, I see the problem here. You make a disclaimer. You say, hey, there are unsecure railings. You have to watch over your kids. Bum. Home has no gates. So there are things we can put in place that will prevent potential lawsuits. We do get a nice insurance coverage, so you can make it work even as it is. Oh, by the way, check out that huge cruise ship which just pulled into Port of Kona. It's bringing tourists with their fat wallets to keep our economy running. So what are the things that I would say are important to consider when making this purchase, and what are the things we should evaluate when making this decision? Well, first of all, location. You can't change location. If you think it's not gonna work, if you don't like it, move along. Don't buy this property. What might be a problem? For example, if you buy a house somewhere close to the water, Galveston, Texas comes to mind. It's hurricane area, very prone to hurricanes. Hurricane Katrina, Rita, lots of damage, multi-billion dollars of damage. Even if you have insurance, we had issues when insurance companies would declare themselves bankrupt if they have multi-billion dollar losses. So I would generally say avoid homes that are prone to damage like that. It's not worth it. There are many places to invest. So location we can change. Layout inside. It comes in two folds. If you have a home, sometimes we can make layout alterations. It's not cheap. It might be expensive. It might be complicated, but you can convert a large bedroom into two small ones, or you can remove walls and you can do different things. Another part about location is, remember, location, if it's a condo or a townhouse, location matters inside the complex. So for example, we find a complex which you love, has great location, walking distance to downtown or whatever might be, but we also have to consider location inside that complex. If it's next to the dump, if it's too close to the swimming pool where kids make noise, if it's by the road, by automatic gate that's with car lights flashing into your bedroom windows, these are the things we want to look for. And this actually reflects in the price. Sometimes people ask me, hey Alexey, why are we paying 1.4 mil for this townhouse if the one next door sold for 1.2? But in reality, it might be that issue. One unit will have ocean views, another one will have road views. So we look at these, and these you can't change. So we move on to the next unit. We don't buy it or we ask for a discount. Then layout of the house. If you are not a fan, it's hard to change. So we want to buy something that's more or less reasonable. Although, like this home shows, it's not as big of an issue as it might seem if you're buying a home thinking, hey, I'm gonna live here yourself. Well, you're not gonna live here, so just ignore that. And more importantly, pricing of so-called holding costs. When people sell homes, they seldom sell homes that are in perfect condition. Often there is delayed maintenance, deferred maintenance, and you would have to put money aside for roof replacements, siding, patios, lanais, bathroom remodels, new furniture, stuff like that. It adds up. We want to make sure that you have that $100,000, $200,000, $50,000 to make that happen. Otherwise, you'll get bad reviews for things we knew we should have changed. For example, we're buying a condo right now. We just bought it, and we're making bathroom remodels because we knew from the start that the unit needs bathrooms. So we planned for vacancy, we planned for remodeling costs, and investor is aware of all that, and he's making the right call of fixing the place up before we put it on the market. This way, when people come in, they go into the brand new unit and they're happy with that. So think of what it will cost you to own the place, not just to buy it, but cost of ownership is very important, especially with deferred maintenance. I think these are the three most important things, with layout inside being the least important because it doesn't matter as much and it's very expensive to change it. So location and price, cost of ownership, these are the things you should be concerned about when making investment calls. That's termite damage. You can replace this piece of wood, but you can't get a house with a non-conforming use permit and an active license. And you can't get ocean view. Just pick your poison. This is easy. Okay, we're downstairs again. This home has 3 bedrooms, 4 bathrooms. It was built in 1981, so right around now, roof will have to be replaced, and major things like plumbing will go out of order, and you would expect some expenses. It has 3 bedrooms, 4 bathrooms. It's about 2,600 square feet, and the lot is 7,500 square feet, which tells me there is not a large yard to maintain, so your landscaping and water bill would be controllable. I see that it does require work, and they have been replacing things little by little. For example, these barn doors are new. I see this furniture is new, and actually I have the exact same furniture in my home. I like it because it's made out of solid mango, even the sides, and it's great because it lasts forever. It's not one of those glued together pieces that falls apart in humid environments. We see that some things they've been replacing, but there is still a lot of work to do. For example, this vanity is dated, there is water damage, there is a little stain here. But overall, because we know for a fact that tenants are coming here, it has a huge 91% occupancy rate. It pays solid income. It is in high demand. In fact, the reason we're filming this at 8 o'clock in the morning is because tenants are moving in today. We have to be out in about 10 minutes because there are guests arriving today. And this tells me this home has great potential. It could be a fantastic purchase for somebody who can fathom the down payment and further holding costs. Check out this door. Beautiful. We step out of this bedroom to this covered lanai. We're in Hawaii, so you don't need any glass. This is all covered in mosquito net. If it's raining, you'll be still sitting here chilling. Simply a fantastic place to be. And I mean, look, it's a neighbor's house. There are some banana trees growing here. It's so nice, so private. Somebody invested a lot of thought into this house, and they made it work. Let's go check out the other bedrooms. Missing smoke detectors. Again, my eye is keen on locating issues. You see, this bedroom is so huge. What I would do if I was managing it, I would put a few cribs over here. This way people with little guests can use it, make it a little more family friendly. This bedroom has its own bathroom, which is great. And then we step into another kitchen, which is located on the first floor. And this is actually the problem with the design of this particular home that I've been referring to, this walk-through bedroom. So in order to get to this kitchen, you have to go across the house from the exterior or walk through the bedroom. Not a great layout, but again, 91% occupancy. Great, people don't care, they want the house, they like it. We see instruction manual for the guests. This is called an Ohana, it's a guest kitchen. It has a sink, a little refrigerator, and well, this is a portable dishwasher, and that's it. Perfect for people who don't like to cook, they just drink and eat pizza. Another bedroom and another bathroom right here. So we have 1, 2, 3 bedrooms and 3 bathrooms on the first level. We have that sleeping area on the patio upstairs, and we have a rooftop lanai, and we have one more half bath upstairs. No, one more full bath upstairs. It's a fantastic property, guys. I'm thinking I should buy it myself, so by the time the video comes out, it might be already in escrow, but we'll find you something similar. Overall, it's my job to make money for myself and for my investors. Thank you for watching this video. We'll see you in the next one. This was an example of how we look at real estate investments. What's important, what's not so important. We close our eyes on a few things. You saw my finger poking into a piece of wood. I don't care about that because location, pyramid, ocean views, it's a nice piece of real estate.